Good Tuesday. I was about to say good Monday, but we are here on Tuesday already. So how are you? Wonderful week to all. Please give me some okay that you can hear me. Some Y in the chat, please. Good. Thank you very much. I was wondering. I asked for Y. I got a few Ys. What would happen if I would ask for something else? All right, guys. So once again, wonderful week to all. See several new names here with us, so welcome to our family. Before we start, a few messages for the new members. Inside the members area, you have the video tour explaining how to use the members area, and inside the trading reports, which you receive after the live trading room, you get the videos, direct videos of the webinars, the most important webinars to watch to understand what we are doing here and how. And of course, the summary of the live trading room meetings. Okay, so let's begin. We have a pretty fat list for today. So let's start. The first one on our list is the euro versus the dollar. Now, according to the long-term cycles, we are still flirting around the area of 61.8. Where did my epic pen disappear? Here. We are still flirting around the 61.8. This is the area. We do have the double cycle at that place and the bullish divergence forming. Now I say forming because the MACD still did not tick to the upside, so we can't make any conclusions for the long term. We also do not have any higher highs, any momentums gained or regained, so no conclusions to be done. At the end of the second cycle from the weekly, which came here, we got a false break on this bottom with a bullish divergence. Later, we followed with a false break on the top, which makes this to be a ranging pattern. At this moment, we are at the bottom of the range, holding the level, the psychological level of the 112.50. The MACD is still pressing to the upside, which means on the short term, the pressure is bullish. Now let's take a look on the short-term cycles as we have them right here. This is the view we currently have on the euro-dollar 4-hour chart at that moment. Two false breaks follow up and a bullish convergence came in play. Right after that moment, we got a pullback. This pullback was technically ideal, as we love to see, with two waves retrace and a bullish divergence. At that moment, we got a false breakout to this place, and look what we got. Triple push up, double push down, trend breakout. So the current short-term pressure for the euro-dollar is bullish, and as per the correction inside the daily range and due to the 4-hour chart cycles, the way they build, we expect to see two waves, which currently is building up. And we do have basically the zone of, if this is the daily double push inside the range, we have few very critical zones here for the euro-dollar, 1, 2, and 3. Very critical combos, as you can see, magnet zone of two different Fibonacci retraces levels. Now, if this is forming a double cycle, currently the correction of the double cycle, that means, in very simple words, that each of its legs has to be cycled by itself. So the first leg is a cycle by itself, which was ending with a divergence. The second, yet to come, yet to happen, yet to form. Therefore, we do require this to turn as a divergence, and it's not the case yet. So in simple words, as long as this trend line holds, the euro dollar is expected to push slightly higher. We marked before two critical zones, actually three critical zones with different Fibonacci retraces. This is very likely where we are aiming. The expansion level should take us pretty much to the same zone. If it's 113.70 area or even higher, 114.30. So this is for the short term. And I say short term because there is a very good chance that this level that we just saw from the weekly cycle would still be tested and trying to achieve. As long as we don't really have a bullish turnaround. And what is a bullish turnaround? Let's say higher highs to be created, or three highs, three lows going up. As long as we don't have that, we cannot make conclusions for the long term. And therefore, our trading at that moment for the euro dollar is based on the shorter view, the 4-hour chart corrective cycle. Now, keep in mind that if this is a cycle we were talking about, then the correction could be in two waves, as we just explained, or a range. That's the two variations of corrective cycles, which means there is a chance that we are going to play inside like that. Does that change anything of the plan? The answer is no. Short term, the plan is looking for retraces and buys. And if you are already running with a buy, then follow up until you get a bearish divergence against you, right? Something like that. So that's for the euro dollar. Questions? If you have anything, guys, write down. Meanwhile, I'll move forward. The next one on the list, euro pound. Now, this is a pair we're following for a while. You know my bearish view. We had a triple cycle to the upside. False break, bearish divergence, first move, a range. At the end of the range, false break with bearish divergence. So basically, my view is this. Okay, nothing new under the sun. Daily chart, we were expecting to see a pullback as a bearish hidden divergence or as two waves or both, and in that case it did come as both. 1, 2, bearish hidden divergence. If that's the case, 4-hour chart should verify. 4-hour chart did. We got a breakout, we got a trend line, we have the lower lows, and basically since this area, this was the 4-hour chart. Okay, and to the hidden divergence. If daily is hidden divergence, then 4-hour has to be the two waves. We got it. False break in play. So far, so good. We start to build a lower low. So basically, the euro pound is bearish, and as long as this zone holds, this is our invalidation. Our plan is bearish. Okay. Pretty simple, nothing more to add, as we have the synchronization here. We followed it for several weeks, just continue. Nothing else to say here. The pound was pretty strong today, and of course it affects all the pound pairs accordingly. Okay, so that's for the euro versus the pound. And where is my euro? Here. We have two more euros to discuss. Euro Aussie also following our long-term plan. We are bearish according to the weekly cycles. And we require to see two waves for the long term or a range. Both scenarios are possible. It does not change any of our plan, because we are after sell the rallies for the long term. Daily chart had the triple push down, triple idea of the push down. Then we got a false break on the bottom and false break on the top, which makes that to be a corrective cycle. In such scenarios, our plan is within the range rallies to be sold. And this is basically what we have for the euro versus the Aussie. This is less for the short term. This is more like for the longer term due to the weekly and the daily cycle combo. So bearish, it was bearish. It remains. Our plan is looking for sell setups within the range prices of the daily with the weekly cycles combinations. And keep in mind, our target, destination target should be the 50%, right? Or until we get any opposite divergence. Euro versus the Aussie. Now, a couple of weeks ago, before I left previous week, I wasn't here, we were talking about the possibility of trading this short term, right? Now, do we have that scenario as for now? Yes, technically, because we are at the bottom of possible range. So theoretically, yeah, we do. Does that make sense to buy here? Well, for me personally, no. And I will explain. If we already had two false breaks, one on the bottom, one on the top, based on the daily range, sell the rallies is the correct plan. Could these rallies happen? Of course. Should we trade them? Personally, I don't think so. Why? Because the combination of weekly and the daily are bearish. So why would we go against it? If the rallies happen, following up with a bearish setup, like it was right here at this rally, push up, bearish divergence, right? And since then, the turnaround with the lower lows. If any rally happens, we can go and look to sell it. Why would we bet will that turn around or not? Make sense? So my personal view is on the short term, at this moment, skip and look for the longer term opportunities. And of course, those who are already in since this scenario, just let that work for you and manage the exposure and the position. And the last one of the euros is the euro versus the Canadian. Basically, again, nothing really changed. We are bearish according to the triple cycle of the weekly. Bearish divergence in play. False break at the top. So our expectations from the pair to approach towards the 50%. Okay? Like this. Here, I found a way to draw the numbers. That's for the long term. That means we are aiming for the long run, the zone of 141-ish, right here. Okay, now we start to drop lower. The weekly chart was a triple cycle to the downside, 1, 2, and 3. Bullish divergence, false break, and false break on the top. That makes it to be what? A possible ranging correction, right? Does that change any of the plans for the long term? Of course not. We would like to see rallies, which later we would like to go and see to sell them. So this is the bigger view within and inside the weekly range. Take a look on the weekly chart and then drop to the daily chart. We can see that the daily chart had a double cycle for us right here. We are now flirting around the 61.8 once again, forming the second false break. One false break was here. This is a second false break, which means corrections are possible and are welcome and are tradable. Why? Because here we are at the zone with two false breaks without getting the correction cycle yet. Not as we just saw at the Euro Aussie. You see the difference, guys? Euro Aussie already had 2 false breaks within the range and already made 2 waves upside within the range. The Euro CAD still didn't, and that's why this one could be tradable. And our plan remains the same. At the moment we get the correction, we are looking to sell that. Corrective cycle could be 2 waves or a range. That means we can see something like that happening and then a sell, or we can see the pair continue dancing inside this kind of pattern. All right, so the long-term plan, this. The short-term plan could be to trade within this possible range. The best way to do that, of course, is to find combinations on the lower time frames, such as, for example, like we had, like here, for example, the divergence here and the breakout, making higher highs. After that, dropping in 2 waves, making a bullish hidden divergence, right here, right, bullish hidden divergence, and continuation. So here is an example of a buy setup. What could be the next possible setup? 2 waves, breakout, another bullish hidden divergence, for example, right, something like that. And then looking for buy setups, once again, according to the strategies and techniques you use. It could be anything. It could be a system, it could be a robot, it could be manual, it could be anything. Okay, as long as the conditions meet and you have a level holds, you are good to go with that. Just keep in mind, any rallies are more aggressive and belong to the short term, because later we would be looking to sell it according to the long-term cycles. That's all for the euro pairs. Any questions about any of them, guys? If there's anything else you would like to raise, just drop a message. So the next ones on the list would be pound. Let's take a look on the pound dollar, which is a rock star since the morning, and with it all the pound pairs. So basically our plan follows up pretty much well. We were bullish for the long term, we remain bullish for the long term according to the, where is my here, according to the longer term cycles we are trading with. Triple, double, expecting to see next trend, right? So we want to see 1 correction, 2, and so far so good, unless there will be any changes, dramatic changes, all related to the Brexit. So far the technical view remains pretty strong. The daily chart provided us the bullish hidden divergence that we have been hunting for some time. The 4-hour chart provided us the 2 false break we were hunting for some time. And as you know, with that trend, and we have the trend from the weekly, supported by monthly cycles as well, when you are with the trend and you get false breaks in the direction of a trend, especially when that comes with moving averages, that's the best time to go and play more aggressive. Remember, when the market conditions are conservative, you can allow yourself to be more aggressive. When the market conditions are aggressive, you would like to be more conservative in your selections. So we got the trendline breakout after the false break, and basically now it's also verify convergence principle. So pound dollar was and remains bullish. Our invalidation level is right here. invalidation, right? And our plan would be looking for bullish setups. For all those of you who are already in, nothing new should be done, just manage it. Okay, that's for the pound dollar. Another pound we already covered, that was the euro pound. The next one is pound versus the franc, also pair that I love, as you know. Same principle exactly. We have been talking about that long time now. Triple, double, false break, bullish divergence. So yes, theoretically we did not yet break this high, and this is still to be done. But take a look how it is following up on the daily chart. Beautiful rally, which was broken into triple cycle on the 4-hour, and beautiful retrace with two waves followed up and confirmed as a bullish hidden divergence. So as long as this low holds, right, this is our invalidation, our view remains bullish. Pretty much same like the pound dollar, just not direct exposure because it also has to do with the franc. And the last pound on my list is going to be the pound Canadian, normally a pair I don't follow, but this one is hard to resist. We do not, and I repeat, we do not have any cycles to be traded, so the only thing we have here is a pretty structure of a bullish trend. Higher highs, higher lows, without any longer term cycles to identify targets for us. So we are trading within the simple principle of a bullish trend. Higher highs, higher lows. The last drop was in double cycle, followed up with a bullish divergence. Each of the daily legs was verified as a cycle by itself on the lower time frame, which makes it pretty sexy technical opportunity. Bullish divergence here, bullish divergence here. Pound versus the CAD looks simply good. And as long as we are holding this invalidation, the idea here is retraces with, of course, with a setup to use us as a buy opportunity. That could move inside the range for a while, no problem with that. Our plan still look for the buy opportunities. And that's my list of the pounds. Now there are, of course, we can go and start talking about all of them: pound yen, pound kiwi, pound Aussie, and so on and so on, right? You have all, you can't expose to all of them. It doesn't make sense. It's very risky. And as for now, personally, I find these pairs more interesting than others. Andre, you're asking about the pound versus the Aussie. Now, this is not on my list. Personally, I think up for the long term. I have no clear view in terms of the cycle for one reason. If this is a triple, which very likely is the case, and this is the ranging correction, which is very likely the case, it's expected to go all the way up. The issue with this one currently is that you are on the top of the range. So no breakouts yet and buy retraces, right? And on the other view, it's not on the bottom of the range, so you can go and buy this scenario. So personally, I find it less attractive, especially when we are sitting inside 2 candles range of the weekly. Okay, I do think up, bullish, but I don't find it kind of attractive, especially if you go to the short term. Also, no clear cycles. Look at these triple highs and triple lows, making it a bit overcomplicated. Based on my techniques, of course, based on different techniques, it could be totally different view. Okay, but as for me, and my techniques, I don't see it attractive. So that's for the pounds. Any questions, guys, about any of the ones discussed? By the way, it's a very interesting story. Recently, we had the All-Star in the NBA, right? It was a beautiful game, nice to show, nice to watch. Sorry, and I got a call from a colleague of mine. He's a big bear, all related to the pound. Recently, in the last few years, and the conversation was funny, but basically he was at that moment. That was, just imagine, it was just slightly below. He was screaming, "Vlad, sell, 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 sell! It's going to crash. Theresa May going to do this. Theresa May going to do that. Going to announce blah 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 blah." Now and he's an inner guy. He's one of my guys that I love to talk to here. Like, what are the big guys are doing? Like the flow of the money. Of course, he cannot give me the numbers and the positions, but the general view, what are the most interesting opportunities. And he was telling me like, Vlad, sell, sell, sell. Now I was starting to wonder, okay, so maybe he has something that I don't know, but all my signs based on my techniques, and of course they can fail in time, no problems with that, but everything for me looks bullish. So I said, no, I'm sorry, I would remain bullish and I will hold my buys here. Say, Vlad, you're crazy, you're going to regret, and so on and so on. So maybe, but I have to be loyal to my own long-term techniques. And that was a good call. And why do I tell you that, guys? When you find your own setup and your own rules, of course, I'm talking for those of you who already developed the setups, right? And developed the personal style. Follow your style. If all the rest of the things you are getting from the surrounding and your environment, right? If everything else fits in your view, good. Don't let anyone, including myself, including anyone, don't let anyone move you from your developed, proven, assuming this is proven, not just expectations, your personal style. Okay, it's very, very important because we are surrounded. We have the news, we have the forums, we have a community, we have the channels, and so many different traders, and so many different techniques, and so many different views, and so many different methods, and so on. In times, one thing would be correct. In other times, the different thing would be correct. Stay reliable, stay loyal with your style you develop. What makes sense to you, what makes logic to you, and what proved to be good for you. It's very, very important, guys, because after a loss, our logic say, let's recover, let's find a way to recover, right? And you start to look for solutions, and you start to look what other people do, and then like, oh, so maybe I should follow. That's normally where troubles begins. Stay loyal to your style you develop and your own analysis expectations. Okay, again, I'm talking to all those of you who are a bit more advanced and already has this touch, right, in the market. For all those who are still looking for that, of course, you need to try, you need to go, you need to practice, you need to find that in you. Okay, all right, let's continue. So the next one is the dollar versus the yen. My long-term bearish view. This pair has been annoying for a long time now, but I want to remind you, when we are facing vertical moves, you probably heard me saying that already several times, but when we are facing almost vertical moves, free falling or free rising, normally the corrections after that are annoying and long against trend continuation. So everything happens right now still remains under logical movements. It does not change the long-term expectations, but it could remain annoying. And this pair in periods, look what it knows to do. Look how annoying and tiny ranges it could develop. It's normal. So why am I bearish? Basically simple, because the weekly chart did not ever in this leg have any bullish divergence. My personal view is bearish. According to that, and the daily chart also did not yet have any divergence, ending divergence on the drop down. Yes, it was extreme, nothing besides that. No real cycles to rely on, so only based on divergence picking. My view is bearish. Daily developing bearish hidden divergence for possible trend continuation, and that's why my view was bearish. So what do we have with this pair? Before that, at the end of January, we got the false break and convergence. That's why we were dealing here with sell. Then came the non-farm payrolls and changed the scenario a bit. Since then, we got the second cycle, assuming this was the first leg and this is the second leg of the cycle. We got it as a cycle by itself. We got the trend line breaking. So basically, the pair is back to bearish. And yes, my view are for sell. We could see that trying to push one time again, maybe trying to clean the stop losses. There are a lot of stop losses located at this high, tons of them. That could go and clean them, because it's also, take a look, magical or not, this is a fact. Take a look where the price is located of the cycle. 61.8, look where it's located. Slightly above the critical stop losses zone. You see that? So there is a chance we're going to clean that and then make it a new trend line and a new breakout. No problems with that. Again, all the higher time frames suggest to the downside. For me, it's only question of time. So I am looking only after possible sells, especially when the daily and the 4-hour chart are both building up the bearish divergences. It might take time, so keep that in mind, guys, because it's hard for short-term traders. It's hard to deal with 4-hour and daily combos. It's like, no, come on, crash, right? It glue us to the charts. We start to talk to the chart, convince it to move, but it doesn't matter how much we will talk. Market doesn't really care. Next one of the dollars is the dollar versus the franc. Beautiful. Well, we don't really have any clear cycle from the weekly besides this range. We are inside, we're on top of it. That could be treated as a two waves. The bearish divergence there is building up. Daily is a double cycle by itself. Bearish divergence as well. And the 4-hour chart confirmed each of its legs, of the daily legs, to be cycled by itself. Since then, we are building up 3 highs, 3 lows, bearish. So the immediate target for that would be the 38.2 of the daily double cycle, which brings us towards around 0.9950. The last trend line was broken and holding. Everything looks bearish here. No signs against that might turn to be possible divergence against on the short term. No problem. But 1-hour chart not even close to that. So basically our plan is still sell the rallies as long as this remains the case. So dollar franc is bearish for us on the short term. And again, why short term? Because we don't really have daily lower highs, lower lows. We don't have that for the longer view. Therefore, only the 4-hour chart. So this is pretty much where we are heading. Okay, so our plan here is bearish, sell the rallies, is a good plan. The next, where's that? Aussie dollar. So Aussie dollar, you know my long-term view here. It's the way I see that. Of course, I might be wrong, but the way I see that, it's a triple cycle with a bullish false break, bullish divergence, and an amazing kicker from the monthly chart a month ago. Weekly, holding this level, divergence in play. Daily, corrected downwards, making a false break on the top, false break on the bottom, possible range. If that's a possible range, that makes that to be a possible first leg and second leg. So for me, as long as this low is holding, I call it invalidation. As you know, my view is bullish. I think Aussie dollar is only for the eyes. For our chart at that moment doesn't have anything against, only potential. And if this is about to become a true story, 1 hour chart has to be a divergence. 1 hour chart is not a divergence. Therefore, we're still bullish here. Also keep in mind that the 4-hour chart now is building up the structure of 3 higher highs, basic definition of a bullish trend. 3 higher highs, 3 higher lows. Say no more. For us, Aussie dollar is bullish. This is our invalidation area. Questions, guys? That's my Forex list. Before I move on to some commodities and DAX, is there any question? Okay, good. So let's move on. The next one I have on my list is the gold. Now, go back in the memories. We were expecting here from 1310 plus short-term correction. We got the correction. It was 2 waves, bullish divergence. Since then, a breakout and a new rally. So I want to remind you that according to the long-term cycles, which is in that case the monthly, we are heading towards the 50% of the triple cycle, which is here, and this is a bullish hidden divergence to confirm that. Right? This is the long term. The short term view, weekly, does not really have anything against us. Rally continues. Daily chart, we got the level here. It was 261.8 of the special cycle. And that's why we were facing a short-term retrace. Keep in mind, there was no false break on none of the time frames, not daily, not 4-hour chart against the weekly. So the only thing we were facing here was this trio. And that's why on the short term we were accepting sell the rallies. But since then, once we got the second push down and it was blocked with a bullish divergence, gold is back to bullish. Do we have any signs against that right now? Only potential. Potential divergence, potential new lag, right? No signs against on the 4-hour charts. Straight rally. Yes, it's building up some kind of an extreme. But as for now, no false breaks, no lower lows. So we could see that pushing higher. Even 1-hour chart doesn't have any extreme or anything, any false break or any turnaround. So for us, it's buy retraces. And the silver is doing pretty much the same. According to the long term, I want to remind you, that's our cycle, double bottom, bullish divergence. This is what we expect. Weekly has nothing against. And more than that, this trend line is trying to be broken. Once it does, it should be a good hold. of this cycle, of course. Now, it's not, again, it's not classical cycle as it is, and that's not the one we rely on. We rely on the monthly. But that's the last trend line available for us within this movement to the downside. Daily chart was kind of a triple cycle. We were looking for a retrace. Now here we got one false break. We never got more than that, right? We never got a second to make any reversal. So we got a correction. Expected correction. Corrective cycle could be what? Two waves or a range. We got that here. Bullish divergence and a breakout. As for now, nothing against, so the expectations remain bullish. The way I see that personally, it looks to me that we are building up here this kind of a thing. It might be the 61.8 of that, and that will be double and double. That should bring us towards 1640-ish, or even bigger, triple correction, and the next one is 1690 or 1770. Anyway, this is the invalidation level as the last low and the 4-hour chart corrections. Nothing against. Our plan remains bullish. And the last commodity on the list is going to be the oil. And the oil is starting to be interesting. Now, we were bearish a couple of weeks ago. We got that. Then we were blocked in this range and continuation. No problems with that. Now look what happens. Daily is making two waves. 61.8, slightly higher. There is one amazing level right here. This is a lot of stop losses located there. And this is a classical place. From here, assuming we can reach that, I would expect the bears to take the control. So the first leg of the daily was a cycle by itself. That was the special cycle we were talking about many times. Correction. And now we're building up the second. So that's why pretty much I think we are heading towards this zone. And from here, how will we start getting the okay for sells? False breaks and turnarounds. Remember our turning principle, guys? Right? Let me just remind you quickly. Our turning principles, false breaks and lower lows. Alternatively, rally, 3 lower highs, 3 lower lows, and then sell the rallies. So at a short view, oil could and should technically push it higher. We want to see that pushing higher. We would like to see the false breaks building up there and go and attack the sells from that zone. And the last one on the list, German DAX, making up the correction we wanted to see. That was our idea. First leg on the daily and then second leg of the daily. The correction is a ranging correction. How do we know it's a ranging correction? Because we faced a false break on the top and a false break on the bottom. Now we are building up the second leg. And basically the market is trying to tell us, the DAX is trying to tell us, get ready. Get ready for what? Assuming this is following the plan, 61.8 in the area is right here. Okay, the clearance zone is right here. We would want to see that climbing to this area, completing the divergence. Then each of the legs from the daily to be cycled by itself on the 4-hour there. So that means something like that. Bearish divergence. Whoa, that's an ugly drawing. Bearish divergence to form here as well. And then get ready. That's pretty much all we can do at this moment. And c'est tout. That's the full list I have for the first day of trading of this week. Any questions, guys? So as you can see, plenty of beautiful, sexy opportunities. And as always, don't force your setups. Wait for them to happen. Once they happen, trade them. Don't try to push the market to do it faster. The market does not care of what you want or me. The market will do what the market will have to do. Kiwi franc. Well, Kiwi franc, to be honest, is not on my list. For long term, I'm bullish due to this cycle, if we can call it a cycle. Personally, and again, of course, also the swap speaking. Now it's building up some weekly double cycle against, right here, flirting the 61.8, could approach the 100 as well. Weekly divergence is not completed after the new breakout. Daily chart building up a divergence by itself and a cycle by itself on each of the legs. First one was special. Second one developing as double. I think most chances that we are heading to this area, 070, 071. From there, some kind of false breaks and a new sell opportunity. The previous sell worked pretty beautiful. Moved all the way down. Right? Sorry, this one. Here. Reached, this was the 4-hour chart cycle. Reached its zone. Basically, game over. I don't have it on my list, to be honest, at this stage. I think it should push slightly higher. Does that mean it's worth to deal with that? Well, not for me. Okay, guys, thank you very much for being here. Appreciate your time. I'll see you a bit later in the Telegram group, of course. And I wish you a wonderful trading week. Tomorrow, Jordan is here with you, and I'll see you again on Thursday. Happy trading, good setups, and a lot of patience to wait for the setups. Thank you for being here, guys. See you around. Bye for now.